Yeah, hello, good evening, and I'm very grateful to you for giving me an opportunity to share my views on the budget 2022 presented today by Honorable Finance Minister Nirmala Sitharaman. This budget contains almost 84 clauses, and it's with the theme of having digital India. So much of importance has been given to the digital thing. Lot of boosting has been given to the MSME sector, economy farmer, and the agriculture based as a farmer also to go ahead. And the various booster as such for developing the economy was been made it, and the finance minister at the outset also made a beginning with the saying that GST collection for the January also with a record hoping more than 1.40 lakhs crores, which has been highest as so far as the concern in the period of the pandemic also, and that is mainly due to the their effective utilization, then anti-tax evasion activities, plus lot of searches on the fake bills and etc. At the same time, when you come to the direct taxes provision, there are a lot of people were expecting that there will be several measures will be taken to give for the COVID related expenditure and the deduction will be allowed. But however, no such things are being uh, provided in the budget as such to go ahead. But the provisions regarding, if you say the people also where there is a fear that there will be a levy of COVID surcharge or COVID cess as such, but fortunately it has not been found in the provisions which have been there to work. So many things have been nullified with the object of having so many judicial decisions which are with there in the context of education says, in the context of 148 proceedings which are being initiated after 1/4/2021, and uh, the basis which has been provided last year in the budget about 148 proceeding as such, you will find that people were happy that a principle of natural justice were provided in the proceeding, that where you will be given the show cause, you will be listened, and then 148 A action will be initiated. However, all those provisions have been now given a go by, and that has really been surprising to see. There are a lot of changes in respect of charitable trust also, where especially educational trust and the hospitals, which were having two parallel provisions which have been with them of section 12A, section 11 revision, and also section 1023C or subclause 1 or 2. There now both the provisions are made at a parallel level. Now here also, even if you are having 1023C registration, still you have to expend 85% of your collection, and those provisions which are been par with the section 11 and section 12A to work ahead. Then in respect of the litigation also, there are so many things which are being said that the question, whenever there is a question of law arises, no repetitive appeals will be made by the department, of course with the consent of the SSC, that such provisions are being required on that line. Say in case of education says also, the because there are so many judicial decisions, including a Bombay High Court, we support that the education says is not a tax and it's an expenditure. To nullify that decisions, retrospective amendment has been made from the assessment year 5/6 with the clarification saying that no such education says will be allowed as a deduction under section 37 of the Income Tax Act as concerned. There is one more change which has been effected on section 14A. Up till now, there are various judicial decisions which speaks about section 14A will be restricted to the exempt income only. Now, that provision will be changed, but this will be applicable fortunately from 1/4/2022. And therefore, now 1/4/22 or 022 onwards, now even if there is no exempt income, and there is a amounts are invested out of for the having in the investment which will be having exempt income, in that scenario there will be a disallowance under section 14A which will have far-reaching impact. Simultaneously, in section 43B also, when you see that there have been under statutory dues, and a lot of debate was going on, if your loan is been converted into the, if your loan is converted, has been interest has been converted as a loan, then it was deemed to be allowed, has been amount has been paid. But that conversion will not be now. It will not be that the interest converted into loan will not be treated as paid, and there will be a disallowance under section 43. There are so many sunset clause which have been provided for the manufacturer and startups, etc. Then at the same time, there are two or three new TDS provisions which have been introduced, and in respect of the provisions on section 194 IA, which is related to the uh, deduction of TDS or a TCS, you can say, on the sale of immovable property, that is purchaser has to deduct that tax. And there is always been a dichotomy when your registration stamp duty valuation is more and actual consideration is less. In that scenario, on what amount the TDS is to be deducted. Uh, to my mind, this provision also will create a lot of litigation, because under section 50C as well as 43CA, there is a safe harbor rule of 10%, difference of 10% or the 20% there. However, in this not provisions have been very unclear here, to so far as whether that safe harbor rule also been given for TDS provisions also. To my mind, it has not been clear. At the same time, if you see uh, the provisions in respect of filing of your revised return, though the period has been extended, now what has been there, it can be only if there is a tax payable more. So you cannot revise your return to purify the mistakes, even though those have been legitimate mistakes. But your return can be revised only in a case where you have to make a payment of additional tax, which indirectly means you are charging with the levy of the penalty also. So far as search assessment is concerned, up till now, what which used to happen, what used to happen is that in case if there has been some losses are there and there has been search and some income has been disclosed, initially it used to be allowed against the set off and you have to pay that amount of tax. But now the provision has been inserted, which speaks about that no such set off of losses will be allowed against the any income disclosed in the search in respect of suppression of sales and other provisions. So it will be again a provision which will have a major impact on the taxation of the assessee is concerned. But at the same time, the welcome provision is in respect of the cryptocurrency taxation. Cryptocurrency was been a light of the day, as such been very heavy discussion going on, and there was no provision to tax. There was no act to regulate the cryptocurrency. But with the introduction of the provisions of the tax on the cryptocurrency, that too at a flat rate of 30%, no deduction of the losses is been there. All those things will be welcome things which are from the economy as such to concern. The there are so many minor changes which have been there. Those has to be gone through, and but overall, if you say that overall in the budget is a good budget, it's a balanced budget. It is a budget for giving boost to the economy, and in the pandemic also. Yesterday, when the uh, finance minister announced the highlight, there also shows that our economy is at the progressive path. In spite of the pandemic, it doesn't affect more, and GST collection also at higher rate, which will also give good things to work out. Same time, for the share market to boost up also, and the investors also, the sales surcharge has been restricted to the 15% on the long-term capital gain, and it is a welcome move. And therefore, to my mind, even share market also has taken it very positively, and therefore, uh, to my mind, even though the provisions regarding the search, even though the provision regarding the 14A, even though the provision regarding 43B and the charitable trust are somewhere harsh, still it is, I can say, it's a balanced budget which can be workable and it will give boost to the economy as such to work out. Thank you very much.